Hi everyone, Stuart here again. It's Thursday the 16th of the 1st, 25. The weekend is approaching. It's been a key week. Key data was yesterday's obviously CPI data, and will look like we're going to get a bit of a weaker dollar. But as you can see here, this is a daily time from the euro, guys. As you can see here, we've got a trend that is very, very well set. We'll look and drill into the details. We'll drill into the details about that later on. But as you can see, we tested one of my, well, probably is my favorite moving average, the 21 EMA here on the daily time frame. We tested it and over it on the 6th and the 7th here on the euro, but the trend remains very much to the downside. Back on the 13th, we went as low as 102.13. You can see this purple line here. It's very much the line in the sand to the downside. Spike yesterday, but down we go. So let's have a look at that move up. So the softer inflation data looked like we were going to get a better dollar yesterday. That's the 4 hour. Actually, that was the result of yesterday. We ended up going down, even though we moved up. Let me just put the hourly chart on it. That's the 4 hours. I'll explain it easier. Guys, remember to just log in and sort of ask if there's any particular asset you want to have a look at. Let me know, and we'll we'll have a look at that in particular as well. But gold's had a nice move this morning of 2,700. We'll have a look at that in a minute as well. So sorry, what I was saying was the first hour. So the data came out, much as we're going to see today, 1:30 yesterday. We had a spike to the upside. We rallied quite nicely, and then we turned around within a couple of hours. We were back to where we started, back through this pivot area we had been at the 103 level, and then we gave up 103 for the rest of the US session. And overnight, Asian session, we haven't been able to breach 103. Opening trades in Europe took us lower. We've been down again over lunchtime here in the UK. And we're currently at 102.64, moving to the downside. So dollar remains on those higher time frames. As you can see, the 4 hour and the daily very much on the front foot, and the one to sort of look up to. Obviously, everybody's now certainly after yesterday's CPI, everybody really is now focused on what Tuesday will bring, what the inauguration speech will herald. Obviously, yesterday's big rally we saw in the stock markets on the back of really strong earnings from the banks. JP Morgan, Wells Fargo all rallied really strongly yesterday. Wells Fargo was up something like 6.5% yesterday. Meta was up 3.8%. Nvidia 3.4%. And Tesla, top of the shop with the big boys, up 8% yesterday on the back of the strong numbers out of the banks. So the earnings season's kicked off, and JP Morgan, the biggest of them all, kicked off the season. It was better than expected. Citibank, Bank of America, all reporting earnings better than the markets had expected. So that lifted the stock markets. That would have normally pressured the dollar. And the inflation data, the fact it weakened yesterday, would have expectations of a weaker dollar. But that's what we saw was a weaker dollar, but didn't last very long, because we were more or less around what was sort of expected. It wasn't much of it was quite a significant deviation. I'm going to say it wasn't a much a significant deviation. It was quite a significant deviation, the 3.2% from 3.3% for the core. However, market shrugged that off, and so we're back down. Obviously, the euro, the ECB area, are expected to move quite aggressively in cutting its rates. It's less so now for the Fed, but we did, when I checked this morning, let me check my notes here, we had a expectation. Where were we? We were back to, where's my notes from yesterday? I should write more clearly, shouldn't I? I think it was about a 32% chance. Yeah, 38% chance. Or sorry, a 38 basis points average now from across Wall Street for cuts in the Fed. It was 32 before the day, so that's probably come back to about 35 perhaps now, as the dollar's improved a tad. But anyway, there we go. The long-term trend remains to the downside. This can't breach and hold above the 50-hour moving average, this euro trend. Certainly the long we had yesterday on the short, as the data came out, these 5-minute charts, they played out quite nicely, but they turned around quite quickly. So we're doing stopped out to actually show you what we did yesterday. If I can get it back, let me just get me if I can get you all back. We were looking at that yesterday, weren't we? If we go all the way back to yesterday at 2 o'clock as the data came out yesterday. So we had this big rally here on the data. We were long, it looked okay, came back, then we went long again, but it didn't, it didn't break away from this area, this 103.32 area, which we identified as the data came out. And then it broke back down. And then on the short term, it then triggered short here later on in the afternoon and moved down and remained low for the rest of the day. So that's the vagrancies or the the risk you take trying to trade the live news. Initially positive, but then the dollar got back on the front foot and euro dollar moved down into close of the day. So anyway, back to today, or back to the hourly chart, I should say. Let's have a quick look. What time is it today? We've got 5 minutes before the other assets come out. So dollar, as you can see here, generally on the front foot. We'll go through the trades that triggered last night on the end of day basis as well after the data's come out. Remember, we got the three. Actually, let's go back to the calendar. You run through this as well. So far today, we've had much better than expected jobs out of Australia, 56,000 compared to 14,000 and nearly 30,000 last month. So again, it's obviously got seasonality of Christmas is involved in the Aussie employment numbers. Unemployment remains has ticked up to 4%, but seems some signs of the cooling of the very bubbly housing market in the US. Data out of the UK again in GDP growth. Was actually better than only grow 0.1 of 1%. It was expected to grow 0.2 of 1%, but previous month, October, it actually been negative. So it was, I suppose, a bit of an uptick, but it's meager. It's absolutely nothing. It's horrible. And the industrial data was quite a significant miss as well. So miserable data out of the UK, and sterling once again under pressure on the back of that trade balance. Also much bigger than expected. It was expected to come down quite significantly, but the weakening dollar, the weakening sterling, UK being a big trade nation, obviously has impacted that. So trade balance quite grotty as well. German inflation for December was a bit hotter, flying in the face of what we'd seen out of other countries. But remember, this is quite, obviously it's made of federal states, and it's a accumulation of all the different federal state data. So there's always a bit of variance in that as well. But that's significantly up on what we were back in November at negative 2%. It's sort of stagflation. We're still in stagflation areas around about this level, but it's a bit hotter again out of Germany. So a bit of fly in the face of what we've seen from other countries so far this month for inflation data. So 5 minutes still. I'll just quickly run what's expected. So we've got 3 key data points here, or 2 key data points, and then the notorious Philly Fed number. Core retail sales is the key data today. Monthly, half of 1% is expected in the data. The year-on-year numbers was the no, not actually on this chart. I think they were about 1%. Claims 210,000 remain another sign of this robust, strong jobs market. Remember, everything about 220, 230, 250 is normal standard economic zones pre-COVID. So there's 200,000, under 200,000, as we've seen a couple of weeks. The 210,000 still a very strong gobble up of jobs. The US market, so claims much weaker than expected. There's an argument. You can see that people are just not going back to the jobs market, but the participation rate, when we see the non-farm payroll data with the monthly data that comes out of with NFP, doesn't actually suggest that is actually a trend that's sort of developing. It sort of did tick up, but it hasn't moved any further. We've got also in about 5 minutes from notorious volatile Philly Fed number, minus 16 for December. December, minus 5.2 negative manufacturing. Remember, manufacturing takes about 8 to 10% of the US economy, but it's hugely significant from a sort of a mindset point of view as far as the Americans are concerned, and most nations are concerned. Most nations like making their own stuff. Trump said again this week about we'll have stuff that says made in America again, and it's much more in the psyche of the politics of the thing, of the sentiment of the markets, rather than the actual economic benefit, excuse me, to the economy or to the consumer, because obviously the consumer likes to buy stuff cheap, and that means imports, but the tariffs are coming on against everybody, as Trump has suggested. We'll see what actually fulfills. So 4 minutes to the data. Let's a quick run through the charts again. So dollar's back on the front foot. Euro down again this morning, 102.56. The other one I wanted to draw your attention to was Billy Bitcoin. I'm sure you're all aware, you Bitcoin traders. We went over 100,000 yesterday. It didn't last very long. It lasted for about an hour into close, and we're back down, but we're still very strong. 99,000. I don't know if I put this on the chart. I can't remember if I put this on. I don't think I did. Put it on the. Oops. Hello. What's it done that? Put it on the indicator. I haven't by the looks of things. No. Is that supposed to be one Bitcoin? What's 1 day? Oh, is that the year? No, it's an hour, minute. Has it done that? Wrong chart, you Phil. There we are. Sorry. Where were we? 15th. Was it yesterday we went long? I can't remember where it is now, but it was down here somewhere, wasn't it? It's actually open here. It's a small on this actual platform. So we were long here on the break of the 20-day. That was it. It's the 14th, not the 15th. Yesterday was the follow-through day, wasn't it? Yeah. So we went long here and closed. Well, it was signaling close. I think we opened it earlier, but close of the break of the 20-day moving average, quite a significant break as well. So cryptos is long as far as we're concerned and up. And the other key asset that everybody loves to talk about is gold. Gold, as I says, over 1,700, but over 1,700, 2,700 significantly today. If we look at the 1 hour chart, you see we broke it and we continue to rally. So broke it, a bit of a down leg, but the two big up candles as we've gone through 2,700 are bigger, and we're moving higher again at 27.11. So gold very much in play. Obviously the weakest dollar news hasn't played out, or stronger dollar coming back hasn't played out. Other factors playing with gold, obviously some ramifications from the settlement between Hamas and Israel, although Israel fired missiles again this morning. The ceasefire truce, as they call it, doesn't actually come into play till Sunday. So Israel once again bombed Gaza this morning. Anyway, sad situation that's played out in the Middle East there. 1710. So new highs, July highs yesterday. Got to the weekly. You can see we were back up here. We haven't been back up here since November. For the gold market, and next leg, obviously we went to 27.85, didn't we? That was end of October, wasn't it? So that's the next. Still a long way away, obviously, on a end of day basis, but we've obviously got to get through 1750 first. But it's a bid gold market, and that's looking quite steady away. Thank you very much. Trailing our stop loss up. That'll it's probably possibly it's a bit closer. No, it won't be there. It'll still be there. I think my stop loss on this end of day move on the gold market. So let's have a quick look at the data, see how it's come across. It's coming over now. I'm going to lose it, aren't I? This calendar that doesn't update, but there we go. That's my WhatsApp. Let's see. Oh dear, that's not great, is it? Come along, Mr. Calendar. That's dropped out. Let me bring in. Let's have a look. Bring in another calendar. let's bring in the Forex Factory calendar here, guys. Let's have a look. So we got a miss. So we had a miss for core retail sales 0.4 compared to 0.5. It's still twice as good as it was last month, so that's better. We've had an upgrade, interestingly, there. That's quite a significant upgrade from 0.7 to 0.8 for the headline number. The headline number's coming at 0.4, also a bit of a miss. And unemployment claims have gone up to 217,000. It's still very, very strong. That's not going to affect things. That's not going to change much. And previous last week has been moved back to 203 from 201. It was, wasn't it? So again, still under 220,000 and a huge jump in the Philly Fed. So lots of things going on there. So that's generally positive for the US economy there. A bit of a smidge of a miss from the retail sales number. Jobs remain robust and Philly Fed's looking quite positive. So that should be all relatively positive for US concerns. So let's have a look at it doesn't justify any particular major move, I would argue, on that. But let's see what the market is telling me. Instant reaction in the 5-minute chart. Yeah, it was more of, a bit like we had yesterday. Good data, much more of a surprise to the upside. It's that's not enough, in my humble opinion, for what it's worth, to change that outlook on the dollar at all. Dollar for me remains quite firm, and I'd be looking to stay short on this, as we were. Obviously, if you were trading this on the 5-minute time frame ahead of the data, you would have been short and probably got out somewhere around here before the data come out. Many people that are trading, scalping it, tend to leave it till about 15 minutes, 20 minutes before the event, before they actually get out. So that's what that was. Perhaps what was that? That's 10. No, that's what we're talking about. This is a 5-minute chart. Yeah, so it came out here at 30, 15. Yeah, so people got it out at 1 o'clock potentially, so give some back. However, obviously longer term traders had perhaps been short on the hourly time frame, would have got out in the previous hours. So missed that move down basically. There we go, down and probably out on that half an hour before the data came out. But again, it's how you want to trade it. Obviously, trading in news has its massive risks. Always better, in my opinion, always has been. I'm not a great news trader, to be honest. I don't particularly like it. People get attracted to things like non-farm payroll because they're seeing a massive pip moves. But that just increases the risk to the other side as well. So let the market settle and see what happens. Yesterday was a classic example of that. Yesterday, absolute classic example of that, where we had this positive move against the dollar on the data that suggested that, but then we reversed it very quickly. So if you'd been looking at 15-minute charts, we've got 15-minute charts from yesterday. It was positive, looked good, and then it reversed, and then it stalled. So it's like, this isn't going to happen, is it? And then you would have perhaps got stopped out if you'd had your stop loss up where you'd first got in, and then it reversed quite quick, significantly. So the money, the big money, was made on the downside following the data later into the day, later into 6 o'clock, into 4 o'clock, the fix in London. Where rates are set for the following day, and be careful trading news. That's what we always say. So sterling against weak. Yeah, it's back under 122, and it's remained under 122. Nothing in that data release is going to help sterling lifted a bit immediately. But we'll see how it pans out. But again, 5-minute trader was significantly short here at 12.20, trailed it down, perhaps got out before the data came out around about here. See how it's going to pan out. But at the moment, it's a continuation trade because we haven't breached back over the 20 period moving average. The 5, the 9, and the 20 are all still aligned, moving down. We haven't had a cross back up from the faster moving across the 5 period hasn't crossed back above the 9 period here, so the alignment is still in place. Leave it to settle, perhaps see what's happening, but certainly that still looks weak. We're in striking distance of 122, so we could easily get back there by the end of the day. But even here on this 5-minute chart, you can see we're continuing to descend. Aussie, following the data this morning, lifted a tad, but we're back to where we were before the strong Aussie news this morning. Actually, the Aussie news came out over here, didn't it? It was up here. This is the Australian jobs data. So it lifted the Aussie data, and as you can see, it's drifted ever since, retraced not as much as where we were before ahead of the data, and then another consolidation, then another leg low. So the dollar remains on the front foot, and again another one testing this key moving average. It's a stronger candle than we just saw on the sterling, engulfing all this previous hour business before the data came out. So that's looking a bit more likely to perhaps move back up the Australian dollar rather than sterling, which remains very much under pressure. The yen, another one. Let's just go back to the daily. Remember our trend. Bit of a cool move yesterday, so I want to talk to you about the trend. We moved, signaling a short position here. That was perhaps there was some rumblings out of Japan and overnight that the Bank of Japan will actually look to hike next week, which might have bit of a surprise. Many were expecting that's not to happen yet, but we've been here before with the Bank of Japan and it's not happened, but it's looking much more positive now. We're into the new year. That was particularly, it was Nomura, and there was another big Japanese bank spinning that story, not spinning it, but suggesting that might be the case. So this daily time frame for the dollar yen finally triggered a short position last night here at 156.45 from this consolidation high. This might be a false move, obviously, but we'll see. So at the moment, there's a small position on that breakdown. The position was added to this morning as the size of the candle was a bit more evaluated. See how it's absorbed all its previous action as we've been going sideways. So 158 we couldn't break and hold above. So remember, that's area we were talking about before. So there's certainly a potential for nice, simple 150 points, 100 points, certainly back to the 155 level, as the 157 level didn't show any sign of holding. And we're, say, 156.50 was broke yesterday on the close, and that's triggered a short on this end of day candle on the dollar yen. RSI moving down, ATR moving up. So we'll see how much that follows through. Obviously, lots depend on what the Bank of Japan may or may not say or suggest for the future next week. And then obviously also next week we've got the new US president as well. So first break there, big support at 155, and the 50-day moving average is just 15 pips below that as well. So big support area at 155 for dollar yen currently as it's rolled over. Dollar CAD doesn't do that. Dollar CAD continues to hold above its 20-day moving average and continues to consolidate here. Obviously, all the political shenanigans in Canada hasn't helped the loonie at all recently, but very similar pattern we just looked at for the dollar yen. If we look at the dollar Swiss, I know a lot of you don't trade the Swissy franc for some reason, I don't know. It's the other way around. We've got a weak Swiss dollar. Remember, they're still in very, very low interest rates. So the dollar has been in a ride and it's held, and it just keeps going up. So 1.9130 at the moment for the dollar Swiss franc. And we've been over, no, we didn't get quite over 0.90. Yes, we did. We got over 0.92 this week. So that's a trend that's set. And as you can see, that's been long here above its 20-day moving average. First break was here at the beginning of October. We had a day under, which closed out some of this heavy position, but then there's a big entry here on the 12th of December as we broke to new highs on the 12th, and then again on the 18th, and it's continued to rally. So that's very much still on point. The dollar against the weaker Swiss franc on a daily basis still hasn't got quite into this overbought area yet here on the daily time frame for pound dollar Swiss. So let me just go back down. Let's have a look at the indices. See how they've reacted. We had a huge, strong day yesterday. The Dow was up 700 points. Hang on a minute. Let's start with the bottom of work. I'll start with the Dow. That one, I can't remember. Oh, it was this one we put it on, didn't we? Dow, we had 700 point gain. Yes, that was enough to trigger an entry for me. I think I put it up on the Discord group, didn't I, yesterday? Our entry was here last night. Let's actually mark this one. It might be others. Stop loss is down here at 42,485. Our entry was at 43,300 or thereabouts. Can't remember the exact number. It's an end of day basis, guys. Having had 700 points, you'd expect a bit of a retrace. We'll see how it goes. Again, it's the first break over the 20-day moving average since the middle of December to 11th of December. We went under, or 10th of December, we were last closed above the 20-day moving average. So we'll see. Obviously, a bit of resistance here. I'll be looking to take profit or some profit as we get to 43,600 on the Dow, but the Dow's 700 points yesterday and triggering a long position. RSI remains pointing up to the upside. What else? I forgot what else we got. Let's just run through them. So the S&P 500 also along yesterday. S&P was up 107 points, 59.49 yesterday. Big strong day. Our stop loss is round this pivot area we talked about before, the 2057. Sorry, it's not 57, is it? It's 50. Yeah, 5800. 5800 on an end of day base. I'll be looking to move that up if this continues to move. But again, here a bit more positive than the bit more positive than the Dow, in fact, because we've already tested the 50-day moving average today. So, but positive on the day today. So you can see. So there we are. Sort of hovering around our entry level from last night. Oh, back to it, in fact, at the moment. So, but that's that remains long. Nasdaq, we didn't take it. It wasn't a Nasdaq trade. It was a 2.45%. We were up yesterday from Nasdaq. Nasdaq 100. Let's take these. This failed short. This wasn't it. These lines here. Let me just take this off over here. Get rid of that. Get rid of that. Get rid of that. This didn't trigger, but it's looking to trigger today, the Nasdaq. If you look at the daily, again, it's strong. For some reason, my private system that sat here next to me didn't trigger on the Nasdaq, but it did on the S&P and the US 30. It's one of those things sometimes. The FTSE also triggered last night, but anyway, big strong day yesterday for the Nasdaq. Nasdaq 100 here. Also up 2.4% yesterday, and again quite significant off a significant floor we'd formed this week. So that's looking quite strong as well. We'll see if that breaks. There we go. It wasn't. It was obviously not a significant break, because that's a significant resistance area where we've got the 50 and the 21 moving average coalescing together. So we've got a 20. Imagine it for each number in a moving average. Imagine it a brick in the wall. So we've got a 20 thick brick wall and a 50 thick brick wall put together. That's 70. It's not exactly like that when they come together like this as they're rising, but it's a thick wall to get through. And similarly, if we're coming down to it, it's a nice thick wall to support us, but we're pushing it to get it, and that's why we stalled at it last night, which is why my system probably didn't trigger properly last night. The break wasn't significant enough, but we're above it at the moment today. Ironically, if this continues, this looks like a negative cross when the 20 crosses from above to below a higher moving average, but it hasn't. It's flattened at it. It's hit it, and it's belly flopped at the moment. That's only because it's a daily number and it hasn't had time to work out where the trend is going. It might just continue to spill through this area here at 21,200 sort of level, but we'll see. Anyway, that isn't long as far as our trading platform is concerned. What did go long last night was the FTSE. I think I put that on Discord as well. The FTSE was long last night, and it's nicely in the money, this one, today on the week GDP numbers. The UK Prime Minister Starmer's actually in Kyiv today, talking support for Ukraine, obviously ahead of Trump's inauguration, which he hasn't been invited to. Special relationship between the US and the UK, apparently, as Reagan and Thatcher put together and pushed two big, strong Tory conservatives. Starmer's in the past has criticised Trump quite vehemently, and so has his Foreign Secretary David Lammy, and they've been snubbed. Or snubbed, if that's the word. Or they're not being invited to the party that's going to take place in 1600 Pennsylvania Avenue next week in Washington. So anyway, FTSE 83, 55. I don't know anybody out there, guys, that trades the FTSE, but even I don't trade the FTSE, to be honest. Except when it triggers on an end of day basis. It's been terrible, boring. It's been horrible, horrible returns over the last few years. Look at this. No direction whatsoever. There's a trend following trade. That's agony, that sort of action, unless you're catching some of these. But if you catch one of these moves, you're likely to get taken out on the other, going in the opposite direction. But anyway, the FTSE is was long yesterday. We've nicely in the money at the moment, but I'll be careful because we're in a when the target projected itself, thought, that looks a bit rich. I'll be looking at that later on. I might give a lot of that back today. But anyway, it's still looking. It is still positive from yesterday's entry, and we are still in the money from 83. 19. We're currently trading at 83, 60 or thereabouts on the FTSE. Any questions, my friends? It doesn't look like it's. Let's have a look. Chat box. Nope. Let's get rid of that. This looks a bit bigger, doesn't it? It's just I'm sure you can see the screen. So, well, we've done the indices, we've done crypto, oil's had a very good run recently, as we've been saying. We've been long this baby and added to it as it's moved through 75. We got to 80, 70. Was that? Yes, that was yesterday. Yes, it was 79.80, wasn't it? Yesterday, that was it. High on the obviously the lift was the Hamas Israel news on the oil market. So that's lifted. We are in quite a peak demand area as well. In inventories, what day is it? It's Thursday. Inventories yesterday. Not actually come up on there. Yes, there we are. 2 million. I know I'd seen them. There were a bigger drawdown than expected. Not massive on that, but it was really the political news, the geopolitical news of the ceasefire being agreed, or the truce being agreed between Israel and Hamas. Celebrations in parts of the Middle East yesterday. But so the trend remains. This stop loss now is at 76.29. I noticed that this morning on this trend. So we've got lots of nice pips in the bag. Last entry was here the day before. On Friday, on non-farm payroll day into close, as we went above the key $75 level, and our stop loss is there at 76.30 now on this end of day basis. That's in the money, but again, it's reaching overstretched here, or maybe sitting looking to close some of that out. The RSI is very stretched as well, but obviously this is a bit more of a geopolitical situation rather than a pure technical situation. So I'll be closing some of that today, probably, if this confirms this down red candle, because we're in this cluster or resistors, the pivot area here. You can see how we've pivoted through there, and this is a swing area up here. So it doesn't look like we might get to the $79 level and hold it on an end of day basis. But oil here, US oil remains big. UK oil Brent is similarly over the key, $80 as far as Brent's concerned, and $82 the next upside target, but we're not trading that one as we stand. So that was it. Oh, right, yeah. The other things I put up on Discord last night was these other ones that triggered. They're out of the money there. Crosses, that was Euro, Aussie and Euro Kiwi. I nearly closed it earlier, but at the end of day, so I left them. So Euro New Zealand, we went short yesterday. It looks like the stop losses. Actually, I don't know. That other platform's not on at the moment, so it looks like a stop loss might have been hit on that one. Unfortunately, that's trading, my friends, isn't it? We just get rid of. There we are. Yeah, that's been stopped out as we've been talking now, basically. So we were short on an end of day basis last night at I can't remember what price I was filled at. I haven't written it down here. I'll update the Discord in a minute when we've finished. Yeah, so we were short from here. 83.21, I think that's right. That rings a bell. As I said this morning, if you look on the hourly chart, it's reversed on us. No, it's reversed on me quite significantly, and it went long here overnight on an hourly trade on this one. But this is our entry down here. It was down here. We got the bottom basically. But that's again, that's trading. You got to take it on the chin, my friends. It's so we entered right at the low of this move, which is quite bizarre because we were drifting down quite nicely, and it's reversed and it's taken us out because we were only looking for about 30 pips, 50 pips. I can't remember how much it was, but here that was our target. Stop loss, obviously, risk reward is terrible, but that's this strategy. If you want more details on that, speak to me. I'll do a video on this strategy as well. This end of day, just looking for the first few moves in the early Asian trades is what this is trying to do. But anyway, that was stopped out. See if the other one maybe as well. The other one was so it's Euro New Zealand stopped out and Euro Oz maybe. It didn't. It went against us obviously as the Aussie data came out. Euro Oz, where's Euro Oz gone? There it is. No, so stop loss is much further away there, but again, it's done the same thing. We caught it right at the bottom here at 56.65 something it was, wasn't it? Early trades came within a smidge of 67, and I was this morning as I looked at the chart. I didn't wake up here. I was around about here. 7 or 8 o'clock. I thought it's gone against it, but it's come back down. I thought this might have continued, but it hasn't. It's slipped up. I might actually close this one out as well. Although it is an end of day, so I should have a bit more patience. It's just the fact that the 20-hour moving average is flat and the 50-hour is moving flat. The end of day is still sort of valid because we've under the 20-day. So I'll bite my tongue on that one and see if that turns around to the outside. But we come with I was expecting a quicker move. That's what these end of day trades that I put on are looking for, quite a quick move and in and out in a few maximum days, usually sort of within the following day. But anyway, we'll see how that pans out. So that's Euro Aussie is still open. Euro Kiwi from last night closed. The stock markets. I can't remember what it was now. The stock markets are all, which the ones we actually placed last night are all still open, aren't they? What was it? It was S&P. It was S&P 500, the UK 100, and the Dow. So those three are all still in the money and running. I've been stopped out with that Aussie Euro Aussie short. The Euro Kiwi is still no. The Euro Kiwi stopped me out, and the Euro Aussie is still in play. There we are. That's it. Yep. That's correct. All right, there we go. That's an update from last night and the data. Let's just go back to the data. It's still not working. Investing.com cleared up. There we are. It's back now. So a review of where we were for Thursday. So that was yesterday's CPI data, which looked like it was going to see a weakening in the dollar. It didn't pan out. So wait till things settle down. Today we've had this lot, haven't we? You can see all that now. Hope you can. Claims. There we are. Initial claims, 217,000. Bit richer than expected, but still very, very, or still quite soft. Quite a strong jobs market. Soft rise in people claiming unemployment. Retail sales missed by just a smidge on the core, so it's not as good as it was expected. But 2.4 of 1% is still twice as good as we had back in November. So good numbers, relatively good numbers, even though it's missed expectations on that one. The headline retail sales. What's that one? Oh, it's down here for some reason. 0.3 of 1%. Many platforms like we saw in the Forex Factory, it had 0.3 of 1%, not 0.4 as index have got here. Oh, sorry, it's this one, isn't it? That's the excluding the petrol, gasoline as the Americans call it, and car purchases. So it was 0.4, and again, 0.4 was what was expected on many. So that's sort of in line with expectations. The annualized number is still fairly healthy at just under 4%, but not as good as it's coming at 3.92%. But November was upgraded to 4.1% thanks to obviously Black Friday and that week ahead of in the end of November of sales for the Christmas period. So again, see how that pans out. The upshot of it all, my friends, is we still have a strong dollar. I choose the dollar index, but it's not on our indexes anymore, but you get a feel for the dollar. Obviously, the major trading partners, obviously most people, the volume is in the euro dollar, and as you can see on the daily trade, we're still down on the day. The data's out now, and if we go to the hourly chart, we had a down hour before the data came out. We're currently up on the back of the data. If we go back to the, where are we now? It's just 2 o'clock. If we go back to the 15-minute chart, it's half 2, 50-minute candle. So we've lifted off our floor. We're up a bit, but it's still not long. It's still under its 20 period here. That one hasn't crossed. 5-minute may have done, but it's probably come back. Oh no, 5 minutes following through, but it's ran to the 50. So there's some pips being taken out there as we got to the 50 there. And the 10-minute trader, 10-minute time frames, he's just about to trigger long if he's following the rules. I haven't been short earlier, so we'll see where that gets. So 10 minutes is nearly up in 3 minutes time. So that's where we are. So dollars are a tad weaker. Nothing in that data is really moving the market. We are now all focused on Trump and Tuesday next week. Tomorrow we've got a raft of Chinese data earlier on in the morning. We've got UK retail sales as well, 7 o'clock GMT. I'll be live here again for a sort of wrap up of the week. I'll look forward to Friday tomorrow morning at 8:30 GMT. So join me for that if you can. If not, watch the recording. If not, never mind, your loss. But thank you, everyone. And again, let me just leave you with our website. We are thePropTrader.com. We're here to help you guys. If you want to be successful, it takes a bit of application from yourself. We've got lots of videos. We've got lots of written stuff. And we've got the evaluations that fit all sorts of trading styles. Again, I can't recommend what to do. I shouldn't be doing that. But, the 2 phases, the standard way of trading. You do the first filter, give it a go. If you've got a few $100s, stretch yourself. Look at a $25,000 account at least, because it gives you the flexibility to take all these different types of trades that I keep showing you. Some of the spreads on some of these are more or less volume traded assets can be a bit wider, so you need a bit more margin to allow you to take that, a lot size. But the beauty of this platform, guys, I'm sure I've said this many times before, the order panel is such an intuitive beast, and it's so much easier to decide how much you want to risk, how much you're looking to trade. So you can put in you're putting your stop loss. You want a trailing stop loss. How much of your account do you want to risk on this particular asset? So 2% is fairly typical. So it's telling me now if we're going to sell this asset. I can't remember what it is now. Euro dollar. 3 lots on this account. 0.3 of a lot, so 3 micro lots on this $10,000 account. And that's what a lot of guys get wrong and ladies get wrong that are trading there. This lot size gets far too big. They'll jump in with a full lot, and it blows the risk out of the water. So if we just do the risk, I get rid of that. Oh, it's not going to do it that way around, is it? No. There we are. I can do it. There's nothing filled in. It's a computer, so it doesn't like things that aren't filled in. So let's just go back to 2% risk. Lots. There we are. It's not letting me do that because I've clicked on that on the size of what I want. So I want to buy, actually. That's what I no, I don't. I want to be selling when I. Anyway, you get my point. We can put in. There we are. 2% risk of calls cost me $200 or $206 currently. 668 pips, 687 ticks to the downside. Okay, similar with the take profit. You put your number in, how far away you want it to be, and it automatically sticks on the chart. There you can see it on the chart. It's really, really intuitive. I really like this platform. It's bang up to date. Not like some platforms we have to work it all out for yourself. It's there for you, and that's a at market, or you could just put in a, you think it's going to take a pending order at this level, but if we get to this level, I think we're going to go high, so we're going to buy it here, or we're going to go below this level, we're going to sell it here, put those orders in and wait for them to be executed at the best fill. So anyway, as I say, we have got all sorts of challenges for all sorts of types of traders. Your account can be funded up to $200,000. If you're good enough to do it with a $25,000 account, you can do it with a $200,000 account, because the application is exactly the same, guys. You've got to, manage your. I'm saying application. I mean the application of yourself, the process that you go through as a trader. The numbers might change down here, but the risk level should be close, very, very close, and you shouldn't be risking anything more than any of these limits that are set here. I see a lot of people bleeding heart about the risk is too tight or the profit target's too high. Come on, this is the real world, guys. It's real money. We're all grown up here. You've got to understand yourself to be successful in this business. Too many people rush into it not understanding themselves, just think they can make money straight away, and they blow it up and they give up far too quickly, in my humble opinion. Anyway, to encourage you to help you get started, we still have our thank you 15 offer running. So it's a 15% discount. We don't need to offer huge discounts. We've got lots of clients. We've got lots of doing things. We're doing things properly. We're not the Instagram kids, as I said yesterday. We're a bit longer in the tooth. I'm certainly longer in the tooth than many. And so thank you, 15. We'll get you 15% off this $175. So come along, come and do it, and let us know how you get on, because we're here to help. All right, see you all tomorrow morning. Take care. Have a great Thursday, and may the pips be with you as ever, my friends. All the best, everyone. Bye-bye.